All right, Alan, thanks for joining us for a few minutes this morning. I know you're very interested and supportive of what John at DMP Holdings is doing related to his advanced commission program. Could you explain a little bit from a customer's perspective of why people participate in an advanced commission type of structure with a company like DMP Holdings?
There's several reasons. The first one, from a financial standpoint, acquiring the funds is a lot quicker than going through a bank or going through a finance source or going through the manufacturer's finance source. The second reason, which is extremely important, is it's an off the balance sheet financial transaction, and it doesn't count as debt on the dealership financial statement. And the third reason is it helps build a strong relationship, a long-term relationship between the dealer and the warranty company. And it also allows that relationship to open up for training, which ultimately helps sell more warranties, helps protect the customer, and helps build a bond and reinforce the bond between the dealer and the warranty company. It's like they're a partner in your business because they have financial success tied to the result.
A very, very good explanation. Are there any other ways in which you use the financial instrument other than essentially a warranty? Is it to place additional product, anything of that nature within your specific dealership operations?
Sure, there's a couple opportunities that facilitate the success in the business office. One is the chance to sell warranty and car care, and tire warranties, glass warranties, and a few other products. And that not only helps the warranty company to sell more products and make money, it helps the dealer sell more products and make money, but it ties the customer to the dealership. And it's a great opportunity for the customer because it protects their vehicle in depth, and it ties them to your store. And so when they have service, they come back to your dealership, and it allows you to build that relationship with the customer so that you're not just selling that customer one vehicle, you're selling them more vehicles in the future because you build a relationship with those folks coming to your service department. You've been able to fix every facet of their vehicle because the vehicle is protected, and it doesn't cost the customer a lot of money. So it's a win-win for the customer, win for the warranty company, and a win for the dealer.
And from a dealership, let's call it business office perspective, as you described it, the financial margins, I believe, are most successful on these type of products, on the add-ons, if you will, versus just the car itself. Is that correct?
That's very true. It's a great margin for the warranty company. It's a great margin for the dealer, and it's great protection for the customer.
Yeah. So this is a key enabler, though, for the company overall, for the dealerships overall, right? If they didn't have a company like DMP Holdings, how would you go about this? Is it just a typical financial loan from a bank like Wells Fargo, or what are your alternative options? Just so people understand that they don't come from this industry.
Sure. Well, there would be possibly some other opportunities, but it would be very, very difficult. It would be much more expensive, and it would take much more time. And it would require investors involved in your business that you might not want in your business, because a lot of times folks that invest in high dollar industries and high dollar businesses don't understand how the operation works, and it could, in the long term, negatively impact your store.
Understood. Would you, as you're thinking about this and the relationship that you've had with DMP Holdings and the future opportunity, would you say that you're more successful as a result of having the advanced commission program available to you than your competitors? In other words, is this a competitive advantage for you versus with others?
It's an absolute competitive advantage from a capital standpoint, from a training standpoint, from a profit standpoint, and from the opportunity to build cash.
Awesome. What other questions should I ask here, guys?
There are some other items that are very, very important. This process or this opportunity in the business has gone from a situation in the early mid 90s to almost a standard practice in the late 90s, to where it's even included manufacturer, the vehicle manufacturers offering advances to dealers. And that's been a result, or that's happened for several reasons. There's been multiple factors that have come together that have facilitated it. For example, public companies started buying dealerships that were in the past owned by an individual or a couple individuals. And this happened in 96 and 97, and that drove up the prices of dealerships. And when you have an organization like DNP and other organizations that got involved with advances, it allowed dealers to buy dealerships without getting bumped out of the market because of the price of the stores. That happened simultaneous with more safety standards being forced on vehicles by the government, which increased the price of vehicles. And also technology being put in the vehicles increased the price of the vehicles. So it enabled the customer to have the opportunity to purchase these warranties and protect their vehicles and minimize their expense in vehicle ownership. Also, you had situations where at the time and now where the vehicle quality has increased drastically. So warranty companies are extremely profitable because their claims have gone down because of the vehicle quality. So it's been a great situation for warranty companies to be very, very profitable, and dealers to be very profitable, and customers to be happy with their ownership because they can get their vehicle fixed.
That's great. That's a great explanation.
Dan, one thing I would tell you too, just I know you'll edit this out, but
yeah,
the ability to private label for the dealership also ties customers back to that store, and we do that for our clients a lot of times. So
yeah, let me
it'll have Aben Reuber dealerships and all that. So I'll let you go with that.
Yeah, let me ask. That's good. That's a good point. Yeah. So, Alan, regarding the customer stickiness, if you will, between the car purchaser and the dealership, talk to me about the importance of white labeling and basically making a custom product that is enabled by DNP Holdings in the background with this advanced commission program. Explain the importance of that from a customer stickiness and retention perspective.
Sure, that's important for several reasons. First of all, by having your private label, you've positioned yourself as though the customer can only come to your operation to get your vehicle fixed or their vehicle fixed. And the more the customer comes in the dealership and the more you do things correct as an operation, the greater that relationship comes. So it isolates that customer to your store, and it allows you to continue to make the customer happy by solving the problems with the vehicle or the maintenance with the vehicle or whatever challenges happen. And that's big. That allows you to not only sell maybe another vehicle in a year, because a lot of people own 2 and 3 vehicles these days, but allows that customer to come back and trade. And it gives you a great trade in 2 or 3 or 4 years because the vehicle's been serviced and the vehicle taken care of. So it's a full circle of winning for everybody, even for the future customer that buys that trade.
Right. That makes sense. Yeah. A full life cycle management from new customer to existing. Yeah.
Sure.
It makes perfect sense to me. Any final thoughts on the program that you wanted to share related to the competitive advantage and why this makes sense? I mean, one of the last comments that I would say is, I think everybody gets tired of working with the big banks, me especially, right? Slow, clunky, rigid, not very, let's call it business centric, even though the people at JP Morgan Chase will hate watching this video. But tell me a little bit about that, Alan. Anything else that really makes it attractive of working with these systems, and specifically DNP Holdings?
Absolutely. When you're dealing with banks and finance companies and manufacturers, you're dealing with corporate people. And corporate people have jobs. They have jobs, they have careers. When you deal with an organization like DMP that's owned by an individual or individuals, you're dealing with an entrepreneur. You're dealing with someone that walks in your shoes. You're dealing with someone that understands what you go through to hire people, train people, take care of customers, operate a business, understands the importance of cash flow, understands the importance of profitability, and understands the importance of taking care of your portfolio by making sure those vehicles are serviced properly before they're sold, and you're not reconditioning your vehicles through warranty. So you're dealing with an individual, or you're dealing with a couple individuals, and that just is a world of difference.
Hey, John, so tell me about from on the DMP Holdings perspective, the difference between when a customer like Alan will get a loan from a bank versus from you, and the secured and unsecured status. Could you explain a little bit about that?
Sure. Well, when a bank is looking at these types of advances, or they look at it as an unsecured loan, because once the money goes into a company like me, they no longer have control of that. They don't know how I'm going to pay out profits, where that security goes. They have no clue, and they have no rights to it. With me, I control the reserves that we put in to pay claims, and then ultimately a lot of profits come out of that. Mm-hmm. And we control that so that there's anything, it's really a much tighter secured loan for me. It's absolutely secure for me. And it can't be for the banks.
Right. So this is a very different scenario from traditional finance versus more of a local finance perspective, meaning the large banks are just operating off of a debt ratio and the traditional ways of doing business. And you're essentially walking side by side with your customers as a partner. Alan, could you maybe speak to why that's important from your perspective as a customer?
That's very important for several reasons. It's not on your balance sheet, so it doesn't impact your debt load, which helps you with your floor plan, and it helps keep your floor plan interest lower because you don't have as much debt. It also allows you to maybe refinance a capital loan. Also, the process of interacting with a company like DMP is so much quicker, and you're dealing with an entrepreneur, so it's someone that understands cash flow, profit, margins, and with those folks walking hand in hand with you, they understand your business and your needs, which allows you to continue to grow, which also allows DMP to continue to grow and make profits and keep their high margins.
This sounds like a perfect marriage to me. I don't know why more people don't do this, quite frankly. So, yeah, that's very helpful. So thank you guys very much for that explanation.
Sure.
Thank you.
Thanks, Dan.